Good morning. This is Chris Robinson Ag Marketing, with your pre-opening grain and livestock comment for Wednesday, August 20th, 2025. Well, what's driving this market continues to be the high yields that the Farmer Tour has seen. Uh, they were higher than expected in Ohio for both corn and beans. They were higher than expected in South Dakota for both corn and beans. So that part of the Eastern Tour has not given us really anything bearish, anything bullish to sort of, turn this thing around. I think that's one reason soybeans came off their highs. That tour will be up and finished Thursday. So there's 2 more days to go. Uh, I guess that's what's going to continue to drive us. You know, we've had a pretty good rally in soybeans, a 55-cent rally off the bottom. We couldn't take out 1050. I think that's going to be the big fighting zone moving ahead. But in the meantime, last time I checked, 1030 was a lot better than 1080. Than 980. Um, take advantage of that. It's 50 cents. 50 cents is probably something worth fighting for. And I would say, if you've got nothing done, if you've got nothing hedged, 50 cents is better than a stick in the eye at this point. So I hope we go higher. If we get it can settle above 1050, then we could probably see some more short covering and actually some more increase of the funds maybe wanting to get long beans and stay short corn and wheat. That's kind of what I see the trade doing here moving ahead. So overnight, D's corn unchanged basically 402 and a half. We had a 3 cent trading range, actually down to 3/4 cent, 402 and a half last trade, but a 3 cent trading range. Pretty sleepy night. Beans a 7 cent range again. I can't remember the last time was. We used to have 10, 15 cent ranges every night. I think the market's just digesting this big crop that's coming down, and the fact that we haven't gotten any surprises from the crop tour. December Chicago wheat up 3 1/4 cent, an 8 cent range overnight. December Kansas City wheat up a penny and a quarter, another 8 cent range overnight. I mean, wheat is fighting for its life down here at these levels. Contract lows, 5-year lows, no two ways about it. So keep your puts on there if you've got wheat. If you know you're going to store it, absolutely positively keep a cheap put under it. Um, that would be my suggestion. What's the downside risk in corn? The charts tell us that it's 360, which is the old 5-year low from August of 2024, 360 and a half. That means there's 20 cents worth of risk if you ask me. So 20 cents worth of risk, you do the math, that pencils out to maybe 380 um, downside risk for new crop corn. Now, I'm not saying we can't go lower. I'm not saying that we can't get some friendly news and turn around and, light this fuse. But every day the crop tour goes along, there's no big surprises. We're still dealing with that huge um, USDA number, 188.8. And so I think in the meantime, it's just a typical Wednesday. We might get a little bit more whippy trade, although it does seem very, very quiet. A lot of the focus, I think, is shifted to the protein complex, live fat cattle. I think if October can take out its big resistance there, 4 or 5 times we stalled out at 232 and change, 232.17. We settled at 231.30. So if we can break through that, it's kind of like breaking through a wall. That old resistance can become a new floor. We saw that at 225. It took us about 2 weeks to we bounced around 225, trying to take it out, Now it looks like we're going to try and rotate up to 235. And I would continue to expect that every time we get a $10 pop, we'll get a kind of a consolidation phase. September feeders. We couldn't get the 355 print. Yesterday's high was 354 double. I think if we take out 355 and settle above it, that opens up the door to people talking about 375 feeders. I know it sounds crazy. 6 months ago, we couldn't believe that we were going to see $3. Um, at some point, this will end. There's a lot of talk out there about years that end in six with the cattle, kind of a cyclic type of things. But people start looking for that when you're at all-time highs. Everybody wants to, be a hero. Everybody wants to call the top. I would say this after doing this for 33 years. If you're long, ride your position, use a trailing sell stop. Sooner or later, the market will turn. The market will tell you. Um, I think for producers, the single best thing you can ever do would be to Google the concept of a put. You get a floor for a certain amount of money for a certain amount of time, and if the market continues to rally, you don't get run over with any margin calls. At some point, we're going to turn. At some point, you're going to have a really good floor. You won't capture 100% of it, but if we can capture 70 or 80% of the move, the meat of the move, then that is a good hedge. So if you're looking for help with your marketing, give me a call 312-638-8868. Have a great day. We'll be back at it today. I don't expect a whole lot of fireworks, just more news from the crop